Welcome to Shadow of Truth. Today is Wednesday, March the 30th, 2016, and your hosts are Dave Kranzler from Investment Research Dynamics and Rory Hall from thedailycoin.org. What's happening, Dave?
Same stuff, different day. You know the routine.
The same routine. Well, let's see if we can't liven it up from the same routine. What do you say?
Let's dive in and see what we come up with.
Well, all righty. With the option expiry and the non-farm payroll coming out on
Talking about
Friday.
the options expiration?
Yes.
All right. Let me just look at something here.
And if they're not able to beat them back with those two, like I said, they're two of their favorite toys right there in their hand. Might be something to that.
I don't pay that much attention to the CME data anymore because it's all rigged anyway. And the last couple options expirations, at least the last month when it was a big expiration month for silver, we actually had a rally that was triggered when everyone is expecting them to smash the market. I mean, even Craig Hemke, who's been really pretty accurate with his forecasts, has called this latest move completely wrong. I mean, we all have. I'm in the same boat. I was looking for them to take gold below 1,200, and I was looking for them to maybe even get silver back down close to $13. And after the last month's CME options expiration, and March was a significant, well, not as significant, but it was a front month delivery month for silver. The metals took off again. And no one was expecting that. Of course, the Dennis Scartman indicator was tried and true. He was short the metals going into that, and I don't know how that guy stays in business, because when he goes short the S&P, the market goes up in our face. He's short now, and it's going up in our face. And when he's long gold, it goes down. When he sells his gold, it goes up. How does this guy stay in business? Now, I do know he used to manage some ETFs, or there was ETFs that were based on his market timing calls, and those went out of business.
There's a news flash.
Right.
A guy that is 100% backwards.
So what's kind of interesting is I kind of got sucked up into the whole thing about gold and silver as well, and that was because all of a sudden, if you looked at the Commitment of Traders report, which again I think those numbers are somewhat, if not completely, published in a manner that they want you to interpret them to mean. So,
well, they're put out by the banksters, right?
Well, the data comes from J.P. Morgan, Scotia, HSBC. Those are the three primary COMEX bullion banks, and they're among the most corrupt banks in the country, in the world. And they've all been sanctioned and fined. J.P. Morgan was sanctioned and fined a whopping $650,000 about 18 months or 2 years ago. The CFTC discovered that they were stuffing trades. When you look at the Commitment of Traders, there's in broad strokes, there's the commercial traders, which would be the banks and the gold and silver producers, and the jewelers jewelry people who buy gold and silver for manufacturing or industrial purposes. Those would be considered the commercial traders. And then there's the large speculative traders, and they break that down into managed money. Then what they call other reportables, which has never been clearly defined. No one really knows. I think it includes. And then there's retail traders. So I think the other reportables are pools of capital that aren't managed money like hedge funds, and they're not retail traders. So the only thing I've ever been able to come up with in well over 12 years of looking at this stuff, or looking at the Commitment of Traders specifically, is that the other reportables would be like family offices and kind of other pools of capital that are professionally managed. Well, J.P. Morgan got nailed for stuffing trades that belonged in the commercial category. They were stuffing them into the other reportables category. And I've been watching the other reportables again, I don't really watch it that closely, except when we start to get to what appears to be extreme levels. And the other reportables has been behaving kind of erratically. So my guess is JP Morgan got that $650,000 slap on the wrist. Whoops, the cost of doing business, and they're back to the usual nonsense. So it's just like the employment report, the GDP report, the inflation report that's churned out by the government. I don't think we can take the commitment of traders report, which the data comes from the bullion banks and it's published by the CFTC. I'm not sure how seriously we can take it. Now, having said that, everyone was looking at the net short position of the commercial category, and specifically, it's mostly the bullion banks, and with silver, it's mostly JP Morgan, and with gold, it's mostly HSBC and JP Morgan. And Scotia is also part of the silver rigging. But so the net short position of the bullion banks started to get pretty high, and the net long position of the hedge funds started to get very high. And typically, historically, what happens is that's when they start attacking the market, and they bomb the market with paper, and it causes sell stops set by the hedge funds to be triggered, and those are automatic because it's all black box computer trading. But then I went right after the last options expiration, and gold and silver didn't do anything that any of us expected. I went and I studied the commitment of traders data a lot more closely, because my partner compiles a spreadsheet of the weekly commitment of traders data going back to early 2005. And what I found was very interesting, because even though the net short position of the bullion banks is relatively high, so what I did is I looked at the average short position by the bullion banks over that period of time. And then I looked for periods where it was a lot higher than where it is now. So currently, the net short position of the bullion banks is a little bit higher than the average net short position, but not too extreme. And it's not even close to being, and this is in gold, because silver is a little bit different, but this is in gold. It's not even remotely close to being anywhere near as high as it's been at its highest. It got so currently, when I looked at the numbers a couple weeks ago, so they've changed, the net short position for gold was about 195,000 contracts. That's taking the reported long positions less the reported short positions. And it's at its highest, there's been periods of time when it's over 300,000, the net short.
Good God.
So, yeah. And there were periods of time in 2010, which is when we had that big run-up before they finally got control of the market in 2011. There was extended periods of time where the net short position was well over 200,000 contracts. And It's actually in the last couple of weeks, it's come down a little bit, as has the open interest. So the reason why I'm bringing this up is that, people can look at the commitment of traders and read commentary out there that's intended to scare them. Oh, no, the banks are really short, they're going to bomb the market. But it's not really in a position yet where they've really been able to successfully attack the market. And I think that's what we've been seeing these last couple of weeks.
And more specifically this week, right?
Well, in the last couple of weeks, every night, as soon as the Globex system opens, which would be 8 p.m. New York time, so it opens up at 6 p.m. I'm sorry, at 6 p.m. New York time and 4 p.m. Denver time. There's about a 1 hour period from, call it 5 p.m. New York time to 6 p.m. when everything goes dark and there's no computer trading. And then at 6 p.m. New York time, the Globex computer system, it's a COMEX operated system or a CME operated system, opens up. And literally usually within the first 5 minutes, they hit gold and silver. Well, and they've been doing that almost every day for the last couple weeks. And there were times when gold was down as much as $10 or $12 during Asian trading, and then it snaps right back up after the London AM fix. So to me, it tells me they're having trouble right now anyway, pushing down the metals. And the other thing that I find interesting is that on a lot of days when gold gets hit, silver actually is up on the day. So today being a good example. Like currently, gold's down about $8 from where it closed at the end of yesterday's at that 5 p.m. cutoff period, and silver's actually up a nickel right now. And I don't know exactly what that means, but I do think they're having trouble. I think they have a bigger problem in silver than they do in gold. And I think they've been throwing a lot of paper at it. In fact, the hedge fund net long position is at or near a record high.
Well, do me a favor. I'm sorry to interrupt you, Dave, but do me a favor and refresh the charts that you're looking at, because gold and silver both just took a nose dive.
Silver took a nosedive, but I'm using the futures. That's what traders look at. We look at the futures. I don't know if you're using Kitco or NetDany. I'm looking at the front month future contract.
Okay.
So the silver's at 15.29 and it's up 2.7 cents.
Because I'm seeing a red number down 15.20 and down on silver 11.
Well, I don't. You must be maybe you're looking at a spot price, or I don't know what you're looking at. I'm looking at a futures price.
Yeah, I'm looking at spot.
Yeah, you want to look at futures, and you're probably looking at Kitco.
Yep.
Kitco's not the spot price. Kitco's a mathematically derived number that Kitco created. It's not the spot price.
Okay.
So everyone uses it and treats it as if it's the spot price, but it's not the spot price.
Okay.
So, in fact,
that's good to know.
Maybe about 7 years ago, my good friend and colleague Jesse of Jesse's Cafe Americain, he did a whole blog post that explained exactly what the Kitco number is and how it's mathematically derived, and it's not the spot price.
Okay.
It's not even really. I mean, it's supposed to be representative of a spot price, and it's based on a mathematical derivative of the futures plus the most recent London price fix. So it's like I said. I mean, anyone who trades this stuff for real looks at the front month futures contract, which is up right now versus where it closed yesterday for silver.
Okay. Wow.
Most people don't know that. Everyone looks at Kitco as if it's spot, and now it's correlated. Kitco's price is correlated with the movement in gold and silver, but it's not anything that's official. It's not. The only people who trade off of it are coin dealers.
Right. Yeah, I know the people that I do business with, the coin dealers that I do business with, that's what they use.
Everyone uses Kitco, but it's not the spot price.
Okay. So with everything that you've just explained as far as the commitment of traders, what do you see, Dave, as far as, like I said, these two targets that the cartel likes to use, the option expiry and the non-farm payroll coming up on Friday. So we've got those two events happening this week, and like you said, they've been trying unsuccessfully, thank goodness, to beat gold and silver back. Do you think they're going to be successful from this point forward? I mean, today's Wednesday. It's Wednesday morning, about 10 o'clock Central, and they're having little success right now.
I mean, that's the $64,000 question, Rory. I've given up trying to make very short-term predictions on the directional price of really anything in this market, because it's so manipulated. There's so much intervention, and there's so much manipulation, and there's so much instantaneous computerized trading that occurs in response to all the intervention that it's impossible to call short-term directional moves in the market. And it's impossible, for instance, to say what kind of reaction the employment number is going to have on gold and silver on Friday. I mean, again, last month when the employment number was released, everyone was expecting gold and silver to get hammered, and it did just the opposite. I mean, it ran up like a banshee. Yeah, right. So, I mean, it's there. The front month silver, oh, it was red for a second. It's back to green. I'm telling you, there's serious buy interest beneath the surface of the market in silver right now. So I honestly, I don't know. I mean, again, I don't even, I used to be very meticulous about paying attention to COMEX options expiration and all the economic data reports. And to me, it's a waste of time to sit there and agonize over what I think is going to happen on what used to be benchmark economic reports or market events like options expiration and things like that. It's just too unpredictable with all the intervention.
Well, that makes sense.
I mean, we've all been conditioned to expect that they're going to hammer gold and silver when the employment report hits on Friday. And the fact is, everyone knows the employment report is completely manipulated and rigged. There's nothing real about that employment report. So, to have to have the market respond to something that's not even real. I mean, it really takes us down the down the rabbit hole.
Pretty far.
Yeah, really far.
Look,
the
grass is growing, so everything must be good.
Right. I mean, it finally hit me this morning, and I don't know. Watching this stock market go higher, and every day it goes higher. I mean, every day there's the economic reports that come out are getting worse and worse.
Well, they should be getting worse and worse as begin to spiral downward.
Right. So the market itself is just becoming more and more dislocated from the underlying economic reality every day. And it finally occurred to me, this market is as insane as the early 2000 tech bubble market was.
Well, and let me ask you this, Dave. I mean, as far as what people from around the world must be looking at, finance ministers from other countries, how can they just sit there and watch this nonsense going on and not do anything unless they're benefiting from it? I mean, that's the only way. Otherwise, somebody of prominence would be standing up and saying, hold on here. Hold on. This is all rigged. This is nonsense. This makes no sense whatsoever. You've got the PE ratios that are a disaster. You've got stock buybacks that are completely out of control, that are doing nothing for the economy, nothing for the company that's doing the stock buyback, but yet you continue to do it and the regulators don't do anything. Why are you allowing that to happen? Why isn't someone around the world stepping up and doing that?
Well, I mean, to begin with, you're making the erroneous assumption that the people who work in government positions where they're supposed to enforce the laws and represent the people are actually doing that, and they don't. I mean, I made the observation back in, and I can't remember if it was 03 or 04, but I had started looking at all this stuff intently every day, all the time in late 2001. And I finally came to the conclusion that they were going to hold up the system with printed money and debt issuance for as long as they could, or until they had confiscated every last crumb of middle class wealth and put it in their pockets. And it's the same in every country, not just the United States, especially in the Western countries. I still think you have governments and leaders over in the Eastern Hemisphere that are somewhat care about their constituents. But the finance ministers that you're talking about, they're put into power and they're paid off by the big corporations and banks and guys like Warren Buffett, who are sitting here stealing from the system every single day.
No, I understand that. I understand that's happening in the West. I'm referring.
That's why no one's doing anything about it.
Now, I'm referring more to the East as far
I think China and Russia are doing something about it. I think what they're trying to do here is they're trying to engineer some type of reset in a slow, methodical way to avoid causing complete global disruption and chaos, which would ultimately lead to war. That's what I really think China and Russia are trying to do. Because if China could pull the plug on the whole thing tomorrow,
yes,
they've got plenty of gold, they've got an industrial base, they've got a strong military. They could pull the plug on everything tomorrow, but I don't think they have any interest. That if they pull the plug, you're going to start seeing nukes fly from the United States, and I don't think China has any interest, if for no other reason than self-preservation, to do something that's going to cause the U.S. to start flinging nukes.
I find it very interesting that the first couple of pieces of information that we receive about the New Silk Road or the One Belt, One Road project is that China sends the first train that leaves China arrives in Tehran, Iran. And then the next piece of information that we receive is that Kazakhstan has gone to the Shanghai Gold Exchange to discuss gold trading along the New Silk Road, the One Belt, One Road project. I find those two pieces of information to be very, very interesting. What it means, don't know, but I know that if you want to send a message to your enemy, you send a train, the very first train on your gargantuan new project, right into the heart of your enemy's enemy, and then you sit down and start talking about gold trade. That should send a pretty chilling message to someone other than me.
Oh, I think we all know what the message is, but the U.S. and the West are going to continue to ignore it for as long as they can.
I mean, do you think I'm just whistling Dixie over here, or do you think there's
No,
something
I
to
saw
that?
I saw that news announcement about Kazakhstan and gold, etc. And I raised my eyebrows on it too, because I mean it clearly has very interesting implications. And again, I think it's part of this process by which China and Russia are slowly trying to affect some type of reset that's not going to cause the type of disruption that, I mean, the only avenue left once there's a reset for the United States is to either go along with it or fight it. And there's no indication up to this point in time that they're going to be willing to go along with it. I mean, they don't want to give up their power. They're addicted to it. They're heroin addicts addicted to heroin.
Yep.
So I just think everyone wants a reset to happen last year, but it's not in anybody's interest for it to happen suddenly, even though I think it will. I think, again, my opinion is ultimately this whole thing's going to end up in some kind of global military conflict that won't have a pleasant outcome for any of us.
Well,
I hope I'm wrong.
Well, I hope you are too. Well, I guess we'll end it there and pick it up in the not too distant future. What do you say?
That sounds good to me.
All right, dude. Well, have a good morning, and I will talk with you soon.
Thanks, you too.
All right.